Welcome back. Now, the second edition of the African Continental Free Trade Area Business Forum, dubbed Biashara Africa, drew to a close today. The event brought together policymakers, industry leaders and entrepreneurs from across the continent to help drive Africa's trade future. Philip Myburgh, Group Head of Trade, Business and Commercial Banking at Standard Bank, joins us with some key takeaways from the event. Thank you so much for your time, Philip. Now, very important engagements happening here. Just talk to us about the main focus points, really the pillars that were zoomed in on in this engagement.
Good evening. Thanks very much for having me. Yeah, it's a very important engagement. This last year was the first one of the AfCTA business forums. This year, the second one called Biashara Africa. It's great to be back in Kigali because that's really where the birth of AfCFTA took place previously with the AU meeting in 2018. Very important topics covered. It was a very good conference. The 3 days have just concluded. And interestingly enough, a lot more positive sentiments coming out of it than last year. I think last year was a lot of time spent on the negatives and on the challenges, and this year a lot more practical, a lot more direct, and a lot more storytelling around challenges, but also solutions that are happening. And then interestingly enough, also specific focuses on sectors such as automotive, pharmaceuticals, covering specific themes that are important. So a lot of ground was covered and a very positive outcome generally.
A lot of ground covered, a lot of talks, but you're actually talking about the practicalities of it. And I mean, we've been talking about the AfCFTA for a number of years now. Has there been any tangible progress made in terms of the effort there for the AfCFTA?
Certainly. And I think a lot of people are perhaps too critical at times, not being aware of the complexity. If you compare it, it's not directly comparable, but the closest comparison is the EU typically. The EU took over 30 years to put into place. It's less countries, it's less complexity. The AfCFTA has just started. It's 54 countries. It's incredibly complex with an incredible challenge historically that we got to fix. So we got to have patience with that change. But to answer your question, yes, there's been some really positive changes. There's been progress on the protocols. There's been progress on a certificate of origin. And the latest really exciting component is the GTI, the Guided Trade Initiative. There's now 39 countries signed up. There's 13 odd countries that have completed all the paperwork, which allows them to start trading tariff-free on 23 specific product items to allow the countries to test those procedures, test those regulations, test the customs, and really learn from those and understand where some of those other non-tariff barriers still exist and where we can fix them. Of course, it's early days, and businesses in those sectors and products, many of them don't even know about this opportunity. But there's some real practical, positive changes happening under the umbrella of the AfCFTA.
And I mean, this is a really big ecosystem. You're talking about, government, the private sector, entrepreneurs and big companies. And there really should be a collaborative effort. But just in that collaborative effort, I mean, what role are banks playing in order to boost that progress of the AfCFTA?
Spot on. It is so complex and it can only be solved when all the stakeholders come together. And that's why a conference like this is so important, because it does create that platform for all of us to come together and listen to SMEs really telling their story. We had an SME telling the story of how she was trying to export coffee from Uganda into Ghana. And ultimately, all the added costs and the taxes ended up at 59% of the cost of her product. But at the same time, you heard of a lady from Nigeria exporting under the GTI, the very first transaction, speaking very positively about her customs experience in Nigeria. So those practical references help these stakeholders to really unpack what works and what doesn't work. Banks, of course, have a critical role to play. We should play a role with finance. We should finance these products, projects, infrastructure projects that are required, clients that want to, that need working capital to trade cross borders. But then also one of the things that's often underestimated is the incredible friction that international payments still create for cross-border trade in Africa. It's arguably the largest non-tariff barrier one can think of, just in terms of day-to-day struggles. Banks have a role to play in partnership with the regulators, in partnership with fintechs, telco industry, etc. And then, of course, something else that we're also very proud of at Standard Bank is we also play a role in connecting clients across the continent. Access to market is so important. Clients need to be able to find each other, find suppliers, find off-takers, and we're very proud of the platforms that we've created to connect our clients to each other. And then perhaps just lastly is access to information. SMEs specifically struggle with access to information, and banks such as ourselves are playing a major role in that. I mean, just next week, we're launching our Standard Bank Africa Trade Barometer, which gives on-the-ground insight on what SMEs are struggling with, and some fantastic insights around trade on the continent generally.
Well, we do have to leave the conversation there. Thank you so much for your time, Philip, just really giving us insights on the conversations and the initiatives helping to build the AfCTA. That was Philip Myburgh, Group Head of Trade, Business and Commercial Banking at Standard Bank.